Welcome in this video. Can Onyxcoin come a big attack? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When the chart is examined closely, it is clearly seen that the price has formed a distinct descending trend channel in the short-term time frame. This structure can be interpreted as a reflection of the selling pressure experienced in the market in the short run. However, although this descending trend has been effective in the past, current technical indicators and the overall market sentiment suggest that this trend is preparing to break and that an upward breakout may be imminent. This stands out as a hopeful development for investors. Firstly, descending trends in technical analysis are usually the result of profit-taking or general uncertainty prevailing in the market for a certain period. However, we have often seen in past examples that such trends are not always permanent and can be broken, especially at strong support zones or in conjunction with positive news flow. At present, the price is moving very close to this descending trend line, indicating that this area is being tested and a potential breakout is likely approaching. Additionally, the recent price action showing consolidation in a narrower range indicates that buyers and sellers are starting to reach a balance, and this tightening may result in a breakout. Such patterns are generally interpreted in technical analysis as precursors to a change in direction. If the price manages to break this short-term descending trend, it would signal not only the end of current pressure, but also the potential beginning of a new upward trend. This structure, which resembles previous breakout examples, also carries strong bullish potential. If this descending trend is broken, a psychological barrier will also be overcome by market participants. In technical analysis, trend breakouts often coincide with shifts in investor psychology, especially when the price has consistently shown a downward trend for a certain period and then breaks upward. Investor confidence is renewed. This leads to increased volume and allows the price to move upward more quickly and strongly. The current position suggests that this is the preparation phase for such a breakout and that the market is transitioning toward a more positive outlook. Moreover, breaking this descending trend would not only signify technical improvement, but also create a positive shift in investor perception, because descending trends generally harm market morale and lead to a loss of confidence. However, the upward movements that occur after these trends are broken create not only technical, but also psychological positive effects. The fact that the price has previously turned down several times from this descending trend line further highlights the importance of this level. Therefore, a potential breakout to the upside this time could trigger a stronger market reaction. In fact, the breaking of such short-term descending trends often signals the beginning of longer-term uptrends. For this reason, the current technical structure is extremely important not only for short-term, but also for medium and long-term investors. If the price manages to push above this trend, new highs may be tested in the subsequent period, and a broader upward wave could begin in the market. Furthermore, recent candlestick patterns have started to form higher lows, building an upward structure. This is a highly valuable signal, especially as the price approaches the descending trend line, because the formation of higher lows indicates that the market is now resisting downward pressure and that buyers are starting to step in earlier. This is a structure that facilitates and accelerates the breaking of the descending trend. But we cannot base our analysis on trends alone. Let's take a look at the other metrics as well. Stay tuned. The Elliott wave theory stands out as a powerful tool in financial markets, offering investors a deep perspective in understanding the nature of price movements. According to this theory, waves in the markets progress in a specific pattern, and each wave has its own psychological and mathematical significance. When we closely examine the current structure, it appears that the price is about to complete the second wave of the Elliott pattern and is likely preparing to transition into the third wave. This is an extremely positive and exciting signal, as third waves are typically the phases where the market moves most strongly and sharply. The second wave, in Elliott theory, is the correction phase and follows the first wave. It is generally a period when investors take profits, some act cautiously, and the market takes time to stabilize. However, the most important point to note is that second waves are the final pause before the third wave. In other words, the phase where the true upward potential of the market can explosively emerge begins with the third wave. Therefore, the fact that the price is now completing the second wave signals the early signs of a major upward move. According to Elliott rules, the third wave is typically stronger, more voluminous, and faster than the first wave. This wave is often a period when investor interest peaks, positive news flow intensifies, and buying pressure increases dramatically. In technical analysis, the third wave is referred to as the heartbeat of the trend, because during this wave, prices not only rise but also a very strong sense of confidence develops in the market. In the current structure, there are strong technical signs that the second wave is coming to an end. Especially in measurements supported by Fibonacci levels, the third wave is expected to reach at least the 1,618 level. This ratio refers to the projection area that is 1,618 times the length of the first wave. However, in more optimistic and stronger scenarios, this level can extend to 2,272 or even, in rare cases, to 2,618. Looking at the current chart structure and technical indicators, it is clear that the completion of the second wave presents a very strong potential for a third wave. The enthusiasm inherent in the third wave of Elliott waves is typically strong enough to be felt by investors. During this wave, market psychology shifts significantly in a positive direction. The skepticism observed in the first wave and the hesitation during the second wave are replaced by conviction in the third wave. At this stage, most investors are now fully convinced of the uptrend. This leads to increased buying pressure and much faster price movement. A similar psychological shift is currently being observed. Additionally, the target levels of the third wave are critical, not only in terms of technical analysis, but also in terms of investors' positioning strategies, because this wave usually offers the highest profit margin. The 1,618 and 2,272 levels are key in this regard. These levels are not only based on Fibonacci projections, but also stand as strong resistance zones that align with past price movements. As the price moves toward these levels during the third wave, market dynamics may accelerate further. Moreover, in addition to the technical structure, overall market news flow, macroeconomic data, and sector-specific developments can also support faster price movement in the third wave. Typically, such large waves emerge when the market enters a broadly positive environment. Currently, signs of recovery in global markets, renewed investor interest in risk assets, and the positive trend in technical indicators suggest that the groundwork for the third wave is being laid. The RSI, or Relative Strength Index, is one of the most widely used and reliable indicators in technical analysis. This indicator makes it very easy to determine whether the market has entered overbought or oversold territory. The RSI value usually fluctuates between 0 and 100, and certain levels are considered critical turning points. In particular, below 30 is considered oversold, and above 70 is considered overbought. In some cases, however, traders can use more customized RSI levels to identify strong reversal zones based on past price behavior. A careful look at the chart shows that the RSI indicator has a very prominent reversal area located in the lower regions. The RSI line has touched this area many times in the past, and each time it has reacted upwards from there, resulting in a positive movement in price. This suggests that this area serves as an important support in the market, not only technically, but also psychologically. In other words, when this level is reached, investors usually start buying again, which causes both the RSI to turn upwards and the price to rebound. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.